Welcome everybody to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. Markets are mostly higher. As President Trump suggests autos may be exempt from tariffs, we'll track how the Indian markets react when they resume trade after a holiday yesterday this hour. India's pharma sector could be in the crosshairs as the Trump administration kicks off a probe into chips and pharmaceuticals on national security grounds. We'll discuss that. And Chinese President Xi Jinping heads to Malaysia today, fresh off his visit to Vietnam to bolster trade ties in the region. JP Yong is leading our coverage in the capital, Kuala Lumpur.
That's right, Sri. T-minus 7 hours, Chinese President Xi Jinping possibly touching down Kuala Lumpur for stop number 2 in his Southeast Asia tour, where he tries to galvanize economic relations in this part of the world as trade wars and tariff concerns continue to pose headwinds for many countries in the Asia-Pacific, including that of China and India. We'll have more in the coverage as the trip and as his visit progresses.
And we will check in with JP in the Malaysian capital later this hour. In the meantime, the Indian markets do join us in about 45 minutes' time. Remember, the markets were closed yesterday for a public holiday. Here's what Gift Nifty futures are indicating. We're looking at an opening number in the region of 23,286. So that does suggest some weakness. And we'll talk about farmers later on. That could be part of the downdraft. The dollar-rupee exchange rate is relatively stable at 85.9690. Let's look at the Asian markets as well. We are seeing some resilience with a few exceptions. We've got Thailand off, and the Hang Seng Index, let's call it flat, at 21,422. Most of the Asian markets are seeing some reprieve today after President Trump hinted easing in tariffs in the auto sector. Trump saying he's considering some tariff pauses to help car companies.
Looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places, and they need a little bit of time because they're going to make them here, but they need a little bit of time. So I'm talking about things like that.
Now, a lot of these auto supply chains are also linked to Vietnam, where Chinese President Xi Jinping was yesterday and called on Vietnam to jointly oppose unilateral bullying. JP Yong is in the Malaysian capital, where Xi is expected to arrive later today. JP, great to see you. Give us a sense of the meeting in Vietnam and what we should expect.
Right, Sri. I think this is also the overarching theme of Chinese President Xi Jinping as he embarks on this multi-country tour of Southeast Asia. You did mention that he did just wrap up his visit in Vietnam, and he's about to land, or is expected to come to Kuala Lumpur for stop number 2 sometime in the late afternoon or early evening of today. And again, harking back to some of the themes and some of the things that he's accomplished out in Vietnam, about 45 deals roughly have now been signed, apparently, between China and Vietnam to deepen economic collaboration. Also around what he said is protecting the multilateral trade framework that's really governed the world for the better part of the last few decades, and also making sure that they can protect the supply chains that run across the entire region. That's something that Vietnam also wants to look at, and something that will also be on the table, at least, when he meets with officials here in Malaysia to talk about China's role and at least their economic connection with Southeast Asia, which continues to grow as China is counted as one of the largest, if not the largest, trading partner for many countries in Southeast Asia. Of course, this all happens against the backdrop of a U.S. tariff policy that continues to look at other countries like China and those here in Southeast Asia. We have to remember also that U.S. President Donald Trump is aware of Xi Jinping's own visit here in Southeast Asia, and he has said that he is aware of this. He says that they are allowed to speak to each other, but he does say that they might be actually talking to, quote unquote, screw the United States of America. Those are President Donald Trump's words, not ours. But then this is something that will have to keep top of mind, because it seems that forging deeper economic relations with China might become an even more sensitive geopolitical issue now when dealing with the United States, which is something a lot of countries here will have to do in the coming weeks, Sri.
JP, it's remarkable, isn't it? And there seems to be a greater sense of urgency amongst these regional superpowers like India and China to hedge their bets in this environment. And with that, Prime Minister Modi, the Indian Prime Minister, was in Thailand last week proposing to revise India's FTA with ASEAN. Do you think these countries are now finding comfort in the region amid all this tariff anxiety?
Well, it's interesting, Sri, because early on we spoke to Hong Leong Bank CEO Kevin Lam, actually, and he did say that despite the fact that we saw a lot of turmoil and panic in the markets over the last couple of weeks, it's given a lot of businesses in Malaysia time to actually sit back, digest it, and when the smoke and the panic came down, they actually said that there might be opportunities. In fact, we might see a realignment, actually, or a rebolstering, at least, of regional ties to try and at least offset any negative economic impact from tariffs in the United States, which means it also creates an opportunity for India to actually build the relationships with Southeast Asia. We talked about the revision of the ASEAN-India Free Trade Agreement that was brought up by Thai Prime Minister Paetongtarn Shinawatra also, and a lot of this really just to lower more walls down and to make sure that more investments and trade flows can be encouraged between India and Southeast Asia. And you might see this realignment. This is something that Ong Kian Ming, the former Deputy Minister of Trade here in Malaysia, also told us earlier on Squawk Box. He says we might actually see more minus U.S. policies in terms of creating trade and supply chain networks, parallel supply chain networks that will cater to the United States, and on the other track, other countries such as China and India, for instance. But again, this will take a momentous effort, could see a doubling up of capital investments, actually. And again, it's a tall task also, because as we know, every day and every week, the trade narrative, or the trade realities, at least, governing the global economy, continue to change as the United States rolls out there and evolves their own tariff policy, Sri.
JP, excellent coverage. Thank you very much indeed for that, sir. In the meantime, no reprieve yet for the semiconductor and pharmaceutical sectors. Trump did hint that tariffs could come soon for these industries. The US initiated Section 232 of the Trade Expansion Act. This allows for an investigation into whether industry imports pose a national security threat. When it comes specifically to pharma, the US relies heavily on India, China and Ireland. Here's what President Trump had to say about those imports.
Pharmaceuticals we're going to do, we don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very serious. It's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now.
Let's bring in Kunal Dhamesha now, pharma and healthcare research analyst at Macquarie Capital. Kunal, thanks for your time. Who, therefore, is most exposed? Who is most diversified and therefore resilient among the pharma names that you cover, Kunal?
Sure. So I would say any company having a good exposure to the domestic market as well as the emerging market like Russia, Brazil, etc., are kind of much more protected from the U.S. tariff. In that sense, within my coverage, I would say there are three domestic focused companies. One is Mankind Pharmaceutical, Alchem Labs, as well as Eris Life Sciences, which are primarily have India business. They are much more protected from the tariff. Apart from that, if I have to look at the large pharma names, I would say Sun Pharma, has the least kind of exposure to the U.S. generics at this point in time. Within the large pharma names like Sun Pharma, Dr. Reddy's, Lupin, Zydus, etc. And in terms of the highest exposure, we have Aurobindo Pharma, Zydus, Dr. Reddy's. They have significant exposure to the U.S. generics market.
Quite right. So Sun Pharma, Cipla, Dr. Reddy's have upwards of almost a third, if not more, of their revenue from the US markets, Kunal. So at what point do we start revising expectations on headline growth, on revenue, and bring price targets down, or is it premature to do that at this point in time?
I think the stocks have reacted meaningfully to the tariff threats at this point in time. and hence there is some probability which is already being baked in the current stock prices. But I would wait, how tariffs take shape before kind of revising down the expectation.
Yes.
I also believe that a lot of the U.S. generics business, nobody expected to grow meaningfully over the next 2 to 3 years, and hence even if at all I need to cut down the expectation, it would be not too much on the growth side.
Yes. Kunal, the best case scenario in this tariff risk environment, would you say, is if concessions on pharma can form a part of the BTA and that mitigates or neutralizes the tariff threat. Do you see that happening? It feels like the BTA between India and the US is moving in the right direction.
No, I definitely believe so, that there will be concession applied to Indian pharma, given that these are generally the generic supplier, and India supplies roughly 45% plus of the drug volume in the US market. And hence, it's very significant. While these are not innovator products, these are part of everyday prescriptions that we see, the antihypertensive medications, anti-diabetic medications, etc. And these are supplied at a fraction of the original innovator pharma's brand names, and are basically key to the health of the citizens in the US, in my view. And hence, probably generic pharmaceutical companies will get some form of concession to avoid the disruption and shortages in the US market.
Yes. So give us a bit more, that's interesting, Kunal, give us a bip more colour on what this means for the generics business of Sun Pharma, Dr. Reddy's and Cipla. There are implications for the US market, but what about domestically in India from a policy standpoint and from the other markets that it is well diversified in? Are there any second round effects here?
I would say not really. Once these, if tariffs are basically they are given concession, then they can keep supplying the products. If there are tariffs supplied, then these companies could look at their portfolio, and I would suggest that they might look to rationalize their portfolio. Roughly, let's say, in the past also these companies have done some form of portfolio rationalization where they don't make money. And in case of tariffs are being applied, they can actually look at rationalizing portfolios, and that would lead to disruption, in my view.
Kunal, how much, as earnings season approaches, how much guidance risk do you think there is inherent in the names that have the most to lose if these tariffs are imposed? And what is the guidance going to look like at a sector level for those who are really at the sharp end potentially, and to what extent has that been priced by the market?
I believe that on the top line, for companies having higher exposures like Zydus, Dr. Reddy's, etc., there might be risk if the tariffs are applied, and if they look at their portfolios, very hard, and they cut back on certain products, then the revenues, we might see some form of decline in revenues over the next couple of years versus current in the US generics market. And then at a console level with India and other businesses, adding in, it might be more like a small decline to kind of neutral-ish kind of top line trajectory. And on the EBITDA level, definitely any kind of tariff would be negative because apart from its direct impact on the profitability, it could also lead to, if companies cut back on the production, it could lead to operating deleverage, because these are the large facilities that companies kind of use in India. So if those capacities are not used, there will be operating expenses still continuing. So at an EBITDA level, we could see more like high single to low double-digit kind of downward revision if tariffs are being implemented. But we'll have to see what's the number, what's the percentage number on tariff that comes in.
How concerned are you about the pipeline drying up if we are entering an environment where potentially approvals from the US FDA could start slowing down or even grind to a standstill, and it could be a similar scenario for new drug applications. What does that do to the pipeline? And again, to what degree has that been priced into the shares of those companies like Cipla and Dr. Reddy's that have most to lose?
So I would basically put these companies in two buckets. One type of companies which have all of their production plants which are cleared by the US FDA right now. I don't see there will be a lot of impact on their pipeline approval because US FDA has approved their plant, and hence the ability to approve products is much more higher. Versus companies who have few plants under US FDA compliance issues. Those are the companies where we can see the inspection delays given the disruption at the US FDA itself. And this delay in the inspection of these plants could lead to some form of delays in the approval. So right now within my coverage, there are two companies, Dr. Reddy's and Lupin, which have all of their plants compliant with the US FDA, versus companies like Lupin, Sun Pharma, Zydus. They have one or more plants which are currently having compliance issues with the US FDA.
Kunal, if we can look at the fundamental story domestically, how much traction or momentum or mileage is there in the weight loss drug sector? And how are some of these names positioning there? And is that going to provide any sort of offset for the revenue stream?
Sure. So right now in India market, there is currently only one GLP-1 drug available, weight loss drug available, which is Rybelsus, which is oral form of semaglutide. And it is being sold by Abbott India because it has been out-licensed by Novo Nordisk to Abbott India. And they currently, their annual sales is roughly around 4 billion rupees. And the patent on the semaglutide is expiring somewhere in March 2026. And hence, most of the companies are gearing towards the launch of the generic semaglutide in the India market. But I believe that India market, given there is no total addressable market, there's no injectable at this point in time available in the market. All these companies will have to create a lot of awareness, before they create a big brands of the semaglutide generic in India. So semaglutide in India, I don't think would be able to offset, the weakness, if at all, in the US generics market due to tariff. I think it's the patent expiry in some other markets like Canada, Brazil, etc. So there's roughly around 80-85 markets wherein semaglutide patents are expiring in 2026. And, companies like Dr. Reddy's are gearing towards launch of the generic product in many of these markets. So collectively, it can offer some form of, support. But India standalone, I don't think that, it can offset the weakness in US generics market due to tariffs.
Understood. And for those names that we discussed, Sun Pharma, Dr. Reddy's and Cipla, that are exposed to the US market, are you hearing, Kunal, that M&A, even bolt-on acquisitions, that is going to be put on hold, capital spending, hiring, we're going to see a slowdown or even a standstill there, given the balance of risks that they are facing?
So I would say, not so much. Specifically, M&A would not be focused on the US generics market. Then M&A would be focused more on the India and domestic, India and the other emerging markets. But these would be more, I would say, companies keep looking at these kind of acquisitions. So very difficult to predict. But all of these companies have strong balance sheet. I would just highlight that Sun Pharma, has kind of moved away from the generic. So when you see that 1/3 of their revenue comes from US, almost more than half of that comes from the patented medicines, which they sell in US market. And they keep on trying to acquire, niche products for the US market, focusing on dermatology, dermato-onco and ophthalmology. So that's where the focus would be. For Sun Pharma, it would be more of this patented product. Other companies would be focused more on the domestic market as well as emerging market acquisitions.
Kunal, let's wrap this up. And if you could put your finger on who is best in breed and most diversified at this point in time, and who is most vulnerable at this point in time from tariffs and the external risks, who would they be?
I would say, Sun Pharma is the most diversified name. The U.S. generics exposure is less than mid-teens percentage point of their revenue. Within these large cap names, I would say Aurobindo and Zydus Life Sciences are the most exposed, with almost 45 to 50% of their revenue coming from the U.S. generics market.
Got it, Kunal. Great to have you on the programme. Thank you very much indeed for those insights on the listed pharma sector in India. Thank you, sir. Kunal Dhamesha there from Macquarie Capital. We'll take our first break and we'll keep talking about tariffs and check in on how the Japanese automakers are reacting to Trump's suggestion of exemptions. We are back in 2 minutes. Welcome back. You're watching Inside India. Some of the stories we're keeping tabs on outside of India today. El Salvador's President Nayib Bukele says his country has no plans to return a man wrongly deported from the United States. He was speaking during a visit to the White House, and talk of the U.S. resident being wrongfully deported dominated the talks. The U.S. government has called the deportation an administrative error, and Trump has said they were not required to bring him back, despite the Supreme Court saying they need to facilitate his return. The Argentinian peso sliding more than 10% after the country loosened capital controls. This after the country sealed a $20 billion loan program with the IMF last week as part of efforts towards broader economic reform. It also announced deals with the World Bank and IDB totaling up to $42 billion of deals. US Treasury Secretary Scott Bessent called the deal historic and one that would bring the country back from the precipice, with President Milei forecasting 8% growth rate in Q2. And pop star Katy Perry was among 5 other women launched into space on a Blue Origin rocket in a trip that lasted around 11 minutes. It marked the first all-female space crew in over 60 years and a resounding success for Blue Origin, the space company founded by billionaire Jeff Bezos. I wonder if Katy Perry is going to re-release Alien as a result. Get it? Alien, space. I'm hip. I know what the kids are listening to. Right, let's move on to more serious matters now. Lin joins us and is watching the reaction in Japanese automakers as Trump hinted on an ease in auto levies. Lin, it's just such an uneasy calm that has descended onto these markets because we don't know where we're heading next in this tariff narrative, frankly.
Indeed, and a very sensitive market as well, right? That's reacting to basically everything that they're hearing from the US president. And this is a very similar story that's playing out again. You've got the US president here saying that he's looking at potentially some sort of a temporary reprieve. He says to allow automakers to be able to onshore, and we know that analysts say, though, that it's no easy task to do that, that at the minimum, and we're talking about very ambitious plans here, would take 2 to 3 years here. But no doubt, though, this is, a lot of these Japanese automakers catching a significant bid off the back of this potential reprieve here, keeping in mind that it was about 3 weeks ago that we had the 25% tariff that was imposed on vehicles going into the US, and then we've got that 25% that will take effect at the beginning of next month in relation to the auto parts. So we're seeing the parts makers doing very, very well, the likes of your Denso, Sumitomo Electric, and then the OEMs themselves. For example, if we look at Toyota, higher by about 5%. We are in the lunch break at the moment, of course. So making back basically all of the losses that it sustained since that 25% auto tariff was implemented at the beginning of this month as well. And we're seeing a lot of those other players, so Honda, Subaru, as well as Mazda, or higher by the same amount, keeping in mind, of course, Sri, that this is an absolutely critical sector for the Japanese economy.
And President Trump has been emphatic about the need for Japan and others to bring down non-tariff barriers. In Japan's case, what progress, if any, has been made?
Yeah, so there's obviously a lot of talk about the currency, about defence, about investment, etc. But the other part of all of this is indeed the non-tariff barriers. And really, it comes down to two things. If you look at that document that's been released by the USTR, so it's about farm products and it's about autos. So if we listen back to, for example, what the US president said at that so-called Liberation Day, right? He was talking about the millions of vehicles that Toyota sold in the US market. But then he's saying that the same, flip of a coin, the Detroit Big Three are not selling very much into the Japanese market. So this is something that they're going to be looking at. They've raised concerns about the fact that there's high non-tariff barriers, particularly in terms of certification and safety. But I think if you ask any analyst, even if this changed, and perhaps this will as part of the broader deal here, Sri, that I still think that, they'll tell you that basically the cars that US makes, that US automakers make, they don't really suit the Japanese market because they're just way too big for the Japanese roads and also not very fuel efficient either.
Yeah, you've got to love those Buicks, though. Lin, excellent. Thank you very much indeed for that. We are back in 2 minutes. Right, welcome back. Let's take a look at these Asian markets, which are broadly positive with a few exceptions. And even there, with the Thai benchmark, we are seeing some relatively modest gains. So it's a story of consolidation and a positive session for the rest of Asia after Trump floated the prospect of exemptions on car makers and tech. But you can argue that this is going to be an uneasy calm given the prospect of volatility in that decision-making and in the policy headlines that we can expect. And we are also counting down to the market open in India, 15 minutes' time. This is how we are shaping up. GIFT Nifty futures suggesting an opening number in the region of 23,290. So that does suggest some weakness. And nothing surprising there, given that pharma and IT services could be under pressure after President Trump announced investigations into both sectors, which may therefore be in line potentially for tariffs on national security grounds. And we were talking to Kunal about that earlier. Let's head back out to the Malaysian capital, where Chinese President Xi Jinping is due to arrive later today. JP Ong is leading our coverage on the ground and is standing by there with a special guest. Hi, JP. Please take it away.
Good morning, Sri. Yes, a lot of things are about to happen here in Malaysia. We're on stop number 2 of Chinese President Xi Jinping's own tour of Southeast Asia as he tries to galvanize economic and political relationships on this part of the world as China and the greater part of Asia also gears up for what's going to be an easy tariff future, courtesy of the Trump administration. We did hear before his visit also that he did remark that President Xi Jinping supports ASEAN's unity and centrality, highlighting respect and a call for more cooperation, similar to what he echoed in Vietnam when he was in Hanoi just the other day. He also did talk about the possibility also of a deepening economic relation. We have to remember that a lot of deals could be on the table, similar to the 40-something deals that were signed between China and Vietnam just over the course of the last day. But we also have to remember that this has now also caught the eye, at least, or the attention of the Trump administration. In fact, speaking to reporters, President Donald Trump did say that he is aware and does think that China and Vietnam can talk, but he does think that these two countries might be attempting to, what he said, screw the United States of America. Those were his words, again, not ours. But again, you can see just how politically sensitive talking to other countries and trying to diversify away in this post-tariff regime is becoming also. Also, when you factor in the unpredictability or the seeming unpredictability from the Trump administration, there are a lot of questions, and getting the balance right will be very important for countries like Malaysia. And this is something we'd like to talk to our next guest about, Michael Yeo, who is from KSI International, a strategic independent think tank here in Kuala Lumpur, Malaysia. He joins us now to talk about why it's going to be a delicate balance and just what the opportunities and threats are going to be in this new tariff order. Michael, thank you so much for joining us today. And again, as we talked about a while ago, this is going to be a momentous visit from President Xi Jinping here in Malaysia. What's at stake for China and Malaysia and the broader ASEAN as he embarks and goes deeper into his Southeast Asia tour, sir?
Well, thank you, JP. I think what is important is to ensure that the relationship between Malaysia and China, and also between ASEAN and China, stays very much on track, despite the uncertainties caused by the Trump tariffs. I think our region will move forward in closer cooperation with China. China has been our largest trading partner for a long time, not only with Malaysia, but for all of the ASEAN countries. And I think President Xi's visit will strengthen the trade cooperation between our two countries, and also potentially look at new Chinese investments into Malaysia.
Michael, one thing that one of our earlier guests said a while ago, former Deputy Trade Minister Ong Ken Ming said, was that it's possible we might see a minus U.S. Policy or supply chain policy where you don't exclude the United States, but you build out parallel supply chains actually that will cater to different parts of the world that might not want to speak to each other. Is this something that could be on the cards actually, not just from between Malaysia and China, but perhaps Malaysia and other major players in this part of the world as they try to diversify away from possible headwinds from these tariffs?
Yes, I think one way forward for Malaysia and other countries in Southeast Asia is to enhance and strengthen what has been known as a China +1 strategy, and to also diversify our export markets, not only to the U.S., but to also to other regions and to other countries. One of the significant outcomes of the ASEAN summit that will take place in May in Kuala Lumpur is the organizing of a GCC ASEAN-China summit, and that could bring China, GCC, and ASEAN closer together to explore trade opportunities from that regional cooperation.
And that's going to be interesting because it's a growing trend actually in Southeast Asia to try and find new partners also. But as we heard overnight, it seems to not be something that the Trump administration might be viewing favorably. We did hear from President Trump where he said China and Vietnam talking together is all right, but he does think again, and just his words, not ours, that both countries might be trying to screw the United States of America. Because Malaysia itself is trying to stay neutral, both diplomatically and economically with regards to this world trade war, how much more difficult is it going to be for countries that want to stay out of the fray and remain neutral and open to trade for both sides if the rhetoric from either side might get even more heated and perhaps even more personal, it seems?
I think Malaysia will continue to remain neutral in a trade war. We value our partnership with both China and the U.S. The U.S. has been a major investor in Malaysia, been Malaysia's largest investor for a long time. So we would want to continue having good relations with the U.S. and to be able to work out with the Trump administration what are possible solutions going forward. There was a special meeting of ASEAN economic ministers held online last Thursday, chaired by the Malaysian trade minister, and ASEAN has agreed to adopt a common position in negotiating with the U.S. We would not retaliate against U.S. tariffs because retaliation is counterproductive in our view. So we do hope that the mission that the ASEAN ministers will attempt to go to the U.S. to meet with the Trump administration will be able to work out some solutions and to how we can mitigate the tariffs.
Michael, this also opens opportunities for other countries, as we mentioned a while ago. We did talk about Indian Prime Minister Narendra Modi in Thailand, and he and Prime Minister Paetongtarn Shinawatra talking about possibly revising the ASEAN-India Free Trade Agreement. What kind of opportunities does this provide for, say, new and emerging powers like India, for instance, to perhaps redefine the role in this global economic supply chain, this global economic world order? And again, is there a role for both India and ASEAN to play alongside each other towards defining a better footing in this new order?
I think there is a great necessity for ASEAN to be looking at diversifying our supply chains and looking at new markets. Cooperation with India is one area that we hope to achieve, but we also recognize that sometimes negotiating with India can pose challenges, not so much from the ASEAN side, but from the Indian side. So hopefully we would be able to narrow some of the differences and to move forward with strengthened cooperation between ASEAN and India.
I'm just curious, just to end things, Michael, what do you think are some of those challenges that both sides might have to be able to discuss in earnest in order to create a closer and more successful cooperation economically?
I think one of the biggest issues that face the India-ASEAN cooperation is the trade in agricultural products. India is a major producer of agricultural products. ASEAN also, and sometimes the opening of borders for agricultural exports can be challenging. And I think that has been an area that we need to address.
And Michael, just to wrap things up, we have President Xi coming to Malaysia. You highlight the opportunities with India, but of course, a lot of this, in the perfect world, we'd have better trade relations with everybody, including the United States. As Malaysia prepares to send their team to negotiate with the Trump administration at the end of this month, what do you think are some of the key things that they'll have to get right in order to make sure that negotiations and talks will be successful in Malaysia's favor?
I think the important thing is to get information and data correct. because although Trump has said that Malaysia imposed substantial tariff on the U.S., the actual fact is it's not the case. It's much lower than what the Trump administration has stated. So we need to clarify, we need to get the information out on the correct position, the correct issues. One of the key challenges that the Trump administration has raised is non-tariff barriers. And I think non-tariff barriers is something that ASEAN needs to look at as a whole and see how we can perhaps reduce the non-tariff barriers to ensure there's freer trade between the various regions and countries.
There's going to be a lot of very interesting conversations here in Malaysia, in the U.S. later on, and in Malaysia again next month, actually, as many countries like Malaysia, China, and the U.S. try to refigure the order of the global trade order, that is. But we'll have to leave that conversation another time. Michael Yeo from KSI Strategic International Initiative, thank you so much for joining us today on Inside India to share your insights as we await the arrival of Chinese President Xi Jinping in Kuala Lumpur for round 2 of his Southeast Asia tour. Sri, for now, it's back to you, but we'll provide more coverage on the ground as we see it transpire.
JP, thank you very much indeed for that. And you would imagine as well that an expanded RCEP and CPTPP is going to be inevitably part of that narrative too. JP, thank you for that. We are counting down to the market open in Mumbai. We're back in 2 minutes. Welcome back, everybody. Indian markets are just about to join the trading day. We're in the pre-open right now, and this is what the Nifty 50 is doing. Well, what it did on Friday, 23,368. So that's where we're kicking off from. This could be a day in which, at a sector level, pharma and IT services really takes it on the chin and is going to be under pressure after President Trump announced investigations into both sectors. And these are sectors that could be in line for tariffs on national security grounds. Otherwise, Indian stocks could take their cue from what has been a positive session in the Asian markets after Trump floated the prospect of exemptions on car makers and tech. So we have the Nifty 50 up by 1.8%. So we are seeing some risk-taking here. And at the moment, the Nifty 50 seems to be taking its cue from the positive sentiment in the Asian markets. But it remains to be seen whether pharma and IT services are going to be a drag. We've got the dollar under some pressure against the Indian rupee. So the corollary here is that Indian rupee is looking a little bit firmer to the tune of 0.3%, 85.7650. Heavyweights in India opening up higher. Let's take a look at them. And this is surprising, somewhat counterintuitive. So there seems to be a fair degree of resilience in the pharmaceutical sector. Let's take a look at the banks, and they are performing strongly at the open. HDFC up by 3%. Let's move on and take a look at how some of the pharma majors are opening today. We did warn that this could be a day where the pharma sector could be under pressure, especially those names that we were discussing with Kunal that have high exposure, 30% upwards of their revenues in the US markets. We're talking about Cipla, we're talking about Dr. Reddy's. And these are the names that have most to lose for potential tariffs that could be imposed by the United States on Indian pharma imports on national security grounds. But we are not there yet. But there is clear and present danger. But at this point in time, the Indian markets seem to believe that pharma could enjoy some concessions and a carve-out as part of a broader deal, perhaps, of a US-India bilateral trade agreement. And we have seen some progress there. Let's talk more about the Indian markets and retail investor interest in India and bring in Gurpreet Sidana, who is the CEO of Religare Broking. Thank you very much indeed for joining us, Gurpreet. Now, first of all, do we stay invested in the Indian markets despite this risk at a headline level on the export sector, on IT services, pharma and the car makers?
Good morning. Good morning.
Good morning.
I'll say that retail investors have been consistently investing in India, and they have shown the kind of resilience, irrespective of whatever has been global news and turmoil. I think it was a good correction which we have gone through. Reasons could be anything, and whatever we were expecting over the period of time has all happened. And sustained global geopolitical reasons, and as well as the expectation of interest rates coming down, we could find enough reasons for market correction, which was a bit overvalued. Now, irrespective of anything, and even the fact that the tariffs have been announced, we have seen that there is a consistent interest from the retail investors in India, and that is also shown from the fact that we are continuously getting more and more interest. The investments which are coming through the mutual fund route are not declined at all. So there is a continued interest. So I don't see any reason that why investors will not be investing in India, irrespective of whatever is happening.
Does it surprise you that the pharma names that have a lot of exposure to the US markets in an environment where Trump is threatening tariffs on pharmaceuticals on national security grounds? I know we're not there yet, but we were expecting to see some pressure for Dr. Reddy's, Cipla and Sun Pharma, but they are performing strongly. What does that tell you, Gurpreet?
So, of course, I don't expect any major impact on the pharmaceuticals sector in India. One, for the reason that tariffs, when it was announced, they were exempted for the pharmaceuticals. And there is a natural demand over here, and India is a place where we can actually, they can look up to. Of course, they need pharmaceuticals, and these are the companies which have been consistently delivering well. So I don't see any reason why pharmaceutical sector should be at any threat or for that reason in this matter.
Understood. Do you feel that pharma could get a carve-out and exemption, deeper exemptions, and we could see a further rebound if it is part of a bilateral trade agreement?
Of course. It has to be, and I'm sure that there will be exemptions for the pharmaceuticals for sure.
Understood. At a broader level, how compelling are valuations, Gurpreet, in the broader market? Or should we expect a deeper valuation reset, especially if there is some guidance risk heading into earnings?
So, headline indices in India have already corrected to around 10 to 15% levels from its peak. And with this, we have seen that whatever there was an overvaluation also in certain sectors has also corrected, and they are now at a very reasonable piece in comparison to the 10-year median. So Nifty as of now is around 20 point something, which is lower than the lower 10-year median for the Nifty 50 index. So I see that the sectors are now doing much better in terms of their valuations, especially the banks, where the price to book ratio has come down to 2.2 now, which is a much lower than 10-year median for the banks, and various other sectors where I believe that the valuations are now good enough for people to relook at the Indian markets from a long-term perspective.
Let's bring in the tariff differential, 26% for India versus 125% for China. How convincing or how strong a buy India, sell China signal do you think that is for foreign investors especially?
Of course, because it gives a competitive advantage to Indian exporters. And not just that, China is being charged more. It will help India to create capacity. Along with that, whatever is going on between US and China, it is a great opportunity for Indian industries to gear up faster and take the benefit of this if it comes true. Because as of now, it is still going into a 90-day moratorium. And I believe that that moratorium can go further. But if it actually becomes the reality, I think that this is going to be a long-term competitive advantage for India substantially. Because this change is not going to be with China. It's actually a lot of other countries like Vietnam, Bangladesh, and various other places which are going to be charged much more than India. So right. India is not an option. It is a compulsion for US to really be a good partner, and we may continue to get that benefit in tariffs wherever and whenever they are announced.
From the perspective of sentiment and flows, Gurpreet, do you feel Indian retail investors are losing some confidence, not just because of the potential hit to headline growth from tariffs, but also reports of a middle-class debt crisis and the associated hit, therefore, on the wealth effect?
So, not to a large extent. I think India is isolated from that. There is some organic, there was some degrowth in Indian earnings, which was there apparently because there was a 5% growth is expected for FY25, which is on the backdrop of a last 4 years of continuous strong growth, which is shown by the Nifty 50 companies. But since that is a good level of correction, I believe that next 2-3 years time we'll again go back into 10 to 13 or 15% growth for the headline indices, and that will give growth opportunity once again to the retail investors to look at good valuations and growth from the Indian companies.
Gurpreet, help us understand why you have a conviction view on real estate, energy and infrastructure, those sectors.
So energy is a continuous area of focus for Indian government, because that's something which is where we believe that there's a lot of growth and need and demand over here. And real estate has bounced back after a very long gap. And we have seen that there's a continuous growth in terms of the demand and the prices in the real estate. Having said that, there is some kind of demand contraction in the luxury real estate market. But on the affordable side, as the interest rates are coming down, we see that there'll be continuous demand over there and the prices will strengthen over there further.
Understood. And in terms of sectors that you're less keen on, FMCG and railways, is there a fundamental reason there, or is it on high valuation?
Yeah, so railways is definitely because of higher continued valuations, and we believe that the growth is going to be there, but railways is going to be dominated by the fact that the valuations have been overvalued for a very long time, and it will take time to grow again. But FMCG is also because of the fact that there is continuous slow growth on the urban markets. Rural markets are still going to grow, and that's going to catch up fast. But since urban is not growing that fast, And we expect that, FMCG will continue to remain in some kind of stress for some time. It may again come back in for staples, but for discretionary FMCG segment, we probably see that that will take some time to bounce back.
Gurpreet, it's interesting that the car makers like Tata Motors heading into this entire tariff diatribe were the ones that had the most to lose. But today in the session, Tata Motors is performing strongly. What is that telling you? And do we continue to? How do we approach it?
Of course, when the tariffs were announced, the first expectation was that it will hit the exports in a big way. Since this gives a 90 days moratorium gives the hope that there could be a bilateral trade deals between India and US, and automakers definitely can get the benefit from there. And that is something which is helping Tata Motors to bounce back, because the expectation of the news, which may probably impact them negatively, has come down. And we believe that that's going to not impact them as much as what it was expected earlier. But also the fact that there have been a lot of correction over the period of time. And yes, Tata Motors have been continuously doing well in domestic markets also. So probably they have more reasons than to feel positive about it.
Gurpreet, excellent. Thank you very much indeed for that, sir. Right, we are awaiting March inflation data due later this evening. Headline: CPI has been cooling this year, hitting an 8-month low in February. We'll discuss the inflation picture and the macroeconomic environment tomorrow with Chetan Iyer, by the way, of Morgan Stanley. That's it from me and all the time that we have on this Tuesday edition of Inside India. Do keep watching CNBC. Access Middle East with Dan Murphy is coming up next.